BigBear.ai is currently trading at $4.14 per share, marking a solid intraday gain of 4.02% as of this Monday morning, May 4, 2026. While the broader market is watching large-cap tech for direction, the real action is happening right here in the small-cap AI sector, where BigBear.ai is aggressively positioning itself before its high-stakes first-quarter earnings report tomorrow. Most investors look at a $4 price tag and see a speculative play, but the reality is that the volume surge we are seeing, hitting over 40 million shares today against an average of 38 million, suggests that institutional players are quietly loading up. There is a massive gap between the public narrative that this is just another struggling SPAC and the reality of their recent acquisitions like Ask Sage and CargoSeer, which have fundamentally transformed their balance sheet. The common belief about BigBear.ai stock is that it lives and buys by government contract timing, which is notoriously lumpy and unpredictable. You will hear analysts on various investing sites talk about the risks of revenue misses, just like we saw in March when the stock took a hit. However, the deeper look reveals that BigBear.ai has shifted from being a service-heavy consultancy to a high-margin software platform player. When you check your individual brokerage or look through the Fidelity mobile app, you might see a negative PE ratio and think it is a clear avoid. But look at the technicals. The stock has established a firm pivot bottom around $3 and has been consistently making higher lows. Today's movement above the 50-day moving average is a signal that the market is finally beginning to price in the integration of those 16,000 government teams they gained through the Ask Sage deal. The tension in the market right now is palpable because expectations for tomorrow's earnings are set at a loss of 6 cents per share. If they even hint at a path to profitability or show that the $250 million Ask Sage acquisition is scaling faster than anticipated, we could see a massive short squeeze. Many traders using the Robinhood app or Interactive Brokers are likely eyeing the 52-week high of $9.39 as a distant dream, but the momentum is building. We are seeing institutional activity that mirrors the early days of Palantir. If you are doing your own self-investing, you have to ask yourself if the risk of a small-cap volatile stock is worth the potential of a company that is now core to the U.S. defense AI acceleration strategy. Interactive brokers and professional desks have noted that implied volatility is through the roof. This is because BigBear.ai is no longer just predictive analytics. They are now embedded in the Middle East through partnerships in the UAE and are handling critical infrastructure AI. While the retail crowd is distracted by the latest Tesla stock swings or the newest Apple stock product launch, the smart investment help is pointing toward these specialized AI defense firms. The reality is that BigBear.ai has reduced its debt-to-equity ratio to 0.16, which is incredibly lean for a growth company in this space. This financial discipline is exactly what the Schwab Intelligent Portfolios and other robo-advisors look for when they start moving money back into the small-cap tech sector. Let's talk about the specific trading dynamics we are seeing today. The intraday range between $3.87 and $4.17 shows that there is a lot of fighting at the $4.10 support level. If it holds above $4.14 through the close, the technical setup for a post-earnings breakout is almost textbook. For those of you managing your own portfolios through SoFi Invest or a Fidelity brokerage account, the key metric isn't just the headline revenue number tomorrow, it's the backlog. Last we checked, their backlog growth was up over 150%. That's the reality that challenges the struggling narrative. When a company has that much guaranteed future work, the current stock price starts to look like a massive disconnect from the intrinsic value. Comment below how many shares of BigBear.ai you currently hold, or if you are waiting for the earnings report tomorrow to make your move. I'm curious to see if you think the defense sector is the safest place for AI investment right now. Now, if we look at the business model specifically, BigBear.ai operates at the intersection of national security and commercial supply chain. They are using AI to solve the most complex what-if scenarios for the Department of Defense. This isn't a chatbot, it's a decision support engine. Their recent move to appoint new HR and corporate affairs officers suggests they are scaling for a much larger employee base, which usually precedes a massive contract ramp-up. We saw a similar pattern with other defense contractors before they moved from the small-cap fringe to the mainstream. This is the kind of detail you won't find on general investing sites unless you are digging into the SEC filings yourself. The macroeconomic pressure is also playing a role here. With interest rates remaining a point of contention, high-growth tech is often the first to get sold off, but BigBear.ai has survived the worst of the post-SPAC cull. They have narrowed their losses significantly, from a 43-cent loss per share a year ago to a projected 6-cent loss now. That's an 86% improvement in their bottom line in just 12 months. If you are looking at Fidelity mutual funds or various ETFs, you'll notice they are starting to creep into the holdings of small-cap growth funds. Institutional ownership is often the precursor to a sustained bull run, and the fact that a director sold some shares at $4 in March shouldn't distract you from the 569% increase in stake by other institutional holders during the same period. Expectations are that the company will still face contract timing volatility, and that's a fair point. The reality is that government work is slow. However, the CargoSeer acquisition gives them a commercial foothold in logistics and trade that doesn't rely on the Pentagon's budget cycle. This diversification is the secret sauce that many investors are missing. They see BBAI as a pure defense play, but the reality is they are becoming a global logistics AI company. This is why the Robinhood stock trading volume has been so high. Retail investors are starting to catch on to the fact that this isn't just a one-trick pony.
As we look toward the future, the catalysts are clear. Tomorrow's earnings call at 4:30 p.m. ET is the immediate hurdle, but beyond that, the ongoing expansion into the UAE and the integration of the Ask Sage platform are the long-term drivers. If the company can prove they can maintain their 1.78 current ratio while scaling, the path to $6 or even $8 becomes very clear. H.C. Wainwright currently has a $6 price target on the stock, which represents a nearly 50% upside from where we are sitting right now at $4.14. Even the more conservative analysts at Cantor Fitzgerald are maintaining a hold with a $5 target, showing that even the skeptics think the stock is undervalued at these levels. For those using the SoFi active investing platform or managing Fidelity IRAs, the takeaway here is about the shift in sentiment. We are moving away from a period where every AI stock was treated like gold into a period where the market is demanding results. BigBear.ai is one of the few small caps that is actually delivering on the implementation side of the equation. They aren't just selling a dream, they are selling software that is currently being used by 16,000 government teams. That's a level of adoption that most startups would kill for. When you compare BigBear.ai to its peers like SoundHound or C3AI, the valuation gap is striking. BBAI is trading at a fraction of the price-to-sales ratio of its larger competitors, despite having a more robust government backlog. If you are a self-directed investor, the tension between the unprofitable tech label and the critical defense infrastructure reality is where the profit is made. The market is often slow to recognize a turnaround until it is already reflected in a much higher stock price. By the time the Schwab Intelligent Portfolios or the big Fidelity ETFs have fully reweighted into a stock like this, the major gains have usually already happened. That's why tracking intraday movement and volume like we are doing today is so vital. Today's 4% movement isn't just noise. It's a signal that the expectation of a bad quarter might be wrong. The reality of the Ask Sage integration might be much more positive than the analysts have forecasted. In closing, BigBear.ai is a company in transition. It's moving from a legacy consultancy model into a modern AI platform powerhouse. Today's price of $4.14 reflects a cautious market that is waiting for proof, but the 40 million share volume suggests that someone knows something. The contrast between the public expectation of a hold and the reality of their 150% backlog growth creates a unique opportunity for those who are paying attention. Whether you use the Robinhood app, the interactive brokers platform, or a traditional Fidelity brokerage account, keeping an eye on these small tap defense players is essential in this market. The reality is that the national security sector is being rebuilt on AI, and BigBear.ai has secured a seat at the table. Tomorrow's earnings will be the ultimate test, but the technicals and the institutional loading we are seeing today suggest that the floor is a lot firmer than most people realize. Stay focused on the data, ignore the noise, and remember that in this market, the gap between what people believe and what is actually happening is your greatest advantage. Maintain your discipline, watch the $4.10 support level closely, and be ready for a volatile but potentially rewarding session as we head into the earnings sprint. The depth of our government integration is a story that is only just starting to be told, and today's intraday strength is a strong indication that the market is beginning to listen. Keep your position sized correctly and stay tuned for the results. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell send for more updates.